Last week's data is in, and well, if you're thinking about buying or selling a home, we need to talk. Inventory, demand, and affordability are the key topics this week, again, but how can you apply this information to decide if there's an opportunity for you in today's market? This is the Orange County Weekly Trend Forecast, and I'm Nathannecochea, your cruise director for this journey. Now let's dive in. As per usual, I'm going to start with the Market Action Index to give us an overall sense of the market. Quick acknowledgement to Altos Research for doing all of the heavy lifting here so that I can get the information out to you. As of end of week, the MAI for Orange County held at the previous week's 48. That keeps Orange County in a strong seller's market when looking at the comparison of new listings to sales. We'll see a great reflection of this in a minute when we take a look at the individual market segments. But before that, let's take a look at the percentage of listings with price decreases. Probably an insignificant change, but the percentage of homes that saw a price decrease nudged up 1% from 32 to 33%. Whoa! Is that a sign of things to come? Is it a sign of a pending price collapse? Most likely not, because in fact the difference was only actually about 0.6%. The reported difference was really just a matter of rounding. You know, you've rounded up on a bill to donate some change to whichever charity the restaurant is supporting. It makes the employee happy, but really, is that 15 cents making a huge difference in your bank account? It's the same here. Is another 0.6% making a difference to buyers? No, at least not yet. But if the trend continues, it'll be a welcome sight to buyers and it'll be a lesson for sellers. Next up is price increases and percent of homes relisted. Both data points remain unchanged from the previous week, with increases at 2% and relists at 10%. That 2% means demand is fine. It means we're not seeing a lot of investor activity, which is probably mostly due to sellers being able to sell for a good price and not being in a position to have to liquidate. Relists is what I'm watching right now because it's kind of at that borderline of pushing toward an opportunity for buyers. The higher we go above 10%, the better it is for buyers because that means that the previously unsuccessful sellers are coming back on the market after either having their listing expire or having a transaction fall through. If we see relists go well beyond 10% combined with price decreases, we'll know the OC market is moving toward buyers. Now let's jump back into the market segments and what's happening with inventory. Last week, the market segments from lowest to highest had median prices of $999,999, $1,525,000, $2,398,000, and finally $5,972,500. That's a lot. And how's inventory going in those market segments? Well, the bottom segment saw 110 new listings with 147 homes absorbed. The lower segment saw 90 new listings with 119 absorbed. The upper segment saw 48 new listings with 104 absorbed, and the top segment saw 25 new listings hit the market and 33 absorbed. So as you can see, demand is still outpacing new inventory. Part of this might be explained by sellers who also become buyers and help eat up available inventory at this higher rate. But regardless, we're still seeing evidence that buyer sentiment has improved kind of in tandem with decreasing mortgage rates. After a slow, most of the year, I think we're going to see a strong close of 2024 when we look at the FOMC's anticipation for another rate cut this year and then another full point reduction in 2025. In my opinion, there's an opportunity for sellers right now. And even though I think that opportunity will remain, I do think it's going to diminish as we move into next year. The reason for that is because if rates continue to go down, more sellers will come to market, increasing competition, and more buyers will be coming to market, increasing competition for the available homes and pushing prices back up. Yeah, I know. Well, what if a ton of inventory hits the market? It won't. There's quite literally no way for enough inventory to come to market that will make a significant difference. The only other option is for mortgage rates to go back to the higher levels we saw last year and earlier this year to drive out buyers, which might scare sellers enough to lower their prices to entice that reduced buyer pool. Look, every opportunity isn't an opportunity for everyone, but if you're able to make a move, I think it's worth looking into. An opportunity is only an opportunity until everyone starts doing it. Until next time.